In this video, I'm going to be showing you guys my 3-step reversal strategy that helped me make $30,000 in 3 weeks with just a $500 account. Now, if you guys just watch until the end of this video, I promise you, you guys will be able to learn these 3 steps and be able to apply them for yourselves. So if you have a small account or is just looking to get into crypto, this is going to be the perfect strategy for you specifically and will help you grow your $500 small account to up over 30,000 or more, just like I did in the last 3 weeks. Before we begin, let me tell you a little bit about me. I'm the head crypto trader at Profit Chasers, a Discord community of over 55,000 people that I teach this exact same strategy to, and also trade live with them every single day. They've seen me take this $500 account to over $30,000 because it was all done live in front of them the whole entire time. Without further ado, let's jump into the actual part on why you click this YouTube video, which is learning the 3-step reversal strategy. Let's get it. Step 1 is going to be spotting the shift, and in order to do that, you have to understand what a change of character is and why this is so important. So a change of character is going to be when we are either in an uptrend or downtrend. Right now we're going to say we are in an uptrend, and a change of character is when we break below this level right here. The reason why is because in an uptrend we're getting higher highs and higher lows all the way up till we break that right here. Okay, because this low was broken, which is a change of character, because a change of character is showing signs of a possible reversal of the trend. So if we are in an uptrend here, a break of this uptrend is telling us 2 things. We're either grabbing liquidity and going to continue on its trend, or we are going to be creating a new trend. So now that we know exactly what a change of character is, the next step is going to be understanding the RSI indicator. And the reason this is so important is because the RSI confluence is looking for a overbought and oversold spot within the market. So if we're not oversold, why would we be buying? And if we're not overbought, why would we be selling? So the RSI is going to be right here. This is going to be showing us overbought and oversold areas within the market. And why this is so important, because when we are overbought would be a good opportunity to look for shorts, and then when we are oversold would be a good opportunity to look for longs. Now, the reason why this is the very next step is because this is going to be helping you spot the shift. So the change of character that we just broke down is going to help spot the shift, and then also your RSI indicator is going to help you also find the spot to potentially catch the shift in the market. So what the RSI is going to be doing right here is going to be telling you exactly overbought and oversold areas. So this is a key important part to keep an eye on every single time you see a change of character, to see exactly where the market is as a whole. The last thing in spotting the shift is your ADX indicator. Now you see down here we have our RSI indicator. We already talked to you about a change of character. Now the last step is going to be looking at your ADX levels, which is the strength of the trend. So if you see, there's 2 lines here. One is going to be the 5-minute, the thin one will be the 1-minute chart, and this is showing how strong is the current trend on that time frame. So in order to take a trade, we want to see one or both of these lines to be under the 25 level. If both of these are above the 25 level, we do not want to take a trade. So those are the 3 things to spot the shift. You have your change of character, you have your RSI indicator showing your overbought, oversold areas, and then you have your ADX indicator showing exactly how strong the trend is on the 1-minute and the 5-minute charts. Step number 2 is going to be marking the zone. So after we've identified a potential shift within the trend, we are now going to be marking our zones. So after the change of character, you're going to draw the fair value gap from the impulsive candle that broke that change of character. So if we're looking right here on an easy line basis, right here where we get this change of character, once we break below this line right here, you are going to be looking for the fair value gaps within this area of breaking the trend and breaking this structure currently. And if you don't know what a fair value gap is, a fair value gap is a partnership between 3 candles, and it is the difference between the 2 outside candles. So as you see right here, there are 3 candles in front of us. It's going to be the difference from the bottom of the first wick to the top of this third wick. As long as these wicks aren't overlapping, and this gap right here is going to be the fair value gap. The reason why this is so important is because a fair value gap shows you where orders were left behind and where there's a heavy imbalance on one side or the other within this zone. So in this case, this is going to be red candles showing that if price does want to return to this zone, there are going to be more orders that need to be filled in this zone, more sell orders specifically in this zone than buy orders. So if price returns to this zone, we are more times than not going to respect this zone, because what this is doing is coming up, filling these orders that were left behind here because we fell so fast through with this candle right here. So when we come up, we're going to fill some more of these sell orders and continue on its way down. Now that is exactly what a fair value gap is. So now that we know what a fair value gap is, we see we got our change of character here, and let's say it's creating fair value gaps on its way down, which we can see right here. We could throw one up right there. This is a fair value gap. Now that we understand what a fair value gap is, and if you guys need more education on a fair value gap, make sure to head over to my channel and watch the full fair value gap video to understand it to your full extent. But now that we have a quick little snippet of what a fair value gap is, we can see on our chart here, we got this change of character because we broke this uptrend, stair stepping up right here. We have our fair value gap candles that it's creating on the way down. For the sake of this video, I will say there's a fair value gap right here. Now moves us on to step number 3, which is going to be our snapback entry. What we're looking for price to do after this change of character is snap back to the fair value gap producing candle that changed character right here, and we are going to put our order 1 to 2 ticks inside the 50% level of this fair value gap. So this is the full entire fair value gap. This dotted line is going to be the 50% level. My order is going to be placed 1 to 2 ticks under that midpoint of the fair value gap, and we are going to be looking for price to snap back right back into these zones to fill more of these sell orders that created the change of character and continue on its path downwards. So once we get filled here, I'm already imagining you guys' questions as we speak is where is going to be your stop loss? And your stop loss is going to be, so our entry's right here, right? Our entry's right there. Our stop loss is going to be 1 to 2 ticks above the fair value gap producing candle. And I'll show you more in depth here on the actual charts, but for the sake of this first part of the video, I'm going to be sharing just line charts so we can all understand and kind of move forward together. Now, once we get filled here, we're going to be setting our stop loss again, 1 to 2 ticks above the fair value gap producing candle. And we are going to be targeting a 1 to 4 risk to reward. Why is this important? Because that means all it takes is 1 winning trade to wipe out 4 losing trades. So we want to target that every single time and leave runners for even larger moves and see if we can catch a major reversal within the market. Now that you see we have our orders and stop loss in place, we're looking for price to come back up into this fair value gap and respect the midpoint of this level and continue down on its path. Now there's one more trick to this strategy is after we enter the trade right here where we did, as soon as price breaks structure and takes out these lows right here, we are going to be moving our stop loss to break even, a little bit in the profit to cover fees. So this is essentially a risk-free trade as soon as this takes the lows that it created before bouncing up into this zone, because what that is telling us is that we're getting lower highs and lower lows. So if the chart randomly wants to bounce off of this level down here and come back up, it is going to be stopping us out, because more times than not, you'll see that this likes to continue through your stop loss and continue to the upside, having a big fake out right here. But that is not the goal here. The goal is to still create lower highs and lower lows all the way stair stepping down to your 1 to 4 risk to reward, if not more. So if we come over to the 1 minute chart, because that is where we're going to be doing all of this good stuff right here, I'm going to see we are in an uptrend as we speak right here that just happened here shortly. And we did take this within the Discord community. And you can see that we are climbing up this ladder right here, creating this trend line. And we get this break of trend line right here, which happens to change the character, because you can see right here, it changes character, breaking through this trend line, showing that it's been building on this trend line for the whole entire day. So once we finally get a break of that trend line, which happens to be the change of character, and also on top of all that confluence, it also produces a fair value gap between these candles. And here you can see it in real time. It's the difference between these 3 candles. So right here. And then what do we see? We see price come back up into this zone, tapping the old trend line, tapping the fair value gap as we see here, and completely flushing out of that for a more than 1 to 4 risk to reward. So on this chart right here, our entry was right here. Our stop loss is 1 to 2 ticks above the fair value gap producing candle. So that's going to be right here. And then we got to ride this all the way down until we got stopped out once this changed of character right here. And then as you guys can see, we rode this absolutely down to the ground, and then we left a free runner that ended up getting stops out right here for more than a 1 to 8 risk to reward. And if we look at this trade and come back here, we can see at this time of taking the trade, both ADX lines are below the level. And then if you come over to the RSI indicator after seeing we are both under the ADX levels, you can see right before this huge sell-off, we were oversold on the RSI indicator. So all the check boxes checked on this trade, which is understandable for how the trade played out, a 1 to 8 risk to reward. It was absolutely perfect. The team totally crushed it. Here are a couple of the wins that you guys can see. I'll have the editor pop them up right above me. But overall, that is the simplicity of the strategy. You don't need to do anything more than those 3 steps. So to go back over it again, step number 1 is going to be spotting the shift, which you're going to be using your ADX levels, going to be using your RSI indicator, and then looking for your change of characters and trend line breaks. And then step number 2 is going to be marking out your zones, seeing exactly what fair value gaps you want to be trading out of. And then number 3 is looking for that snapback entry with 1 tick in the midpoint of the fair value gap, and then your stop loss is going to be 1 tick above the fair value gap producing candle. The reason why I love this strategy so much is because you're putting on such little risk for a max amount of absolute huge profits. So that is why I love this strategy, because you can risk just a little bit to make a lot more. But there are a few things I do want to cover on when you should not be trading this strategy. Is ADX is too high. Both of them are over 25 level. Weak change of character. We need conviction on that change of character, creating a fair value gap, showing that price is really wanting to break out of that and create a new trend. Because if we get a really weak change of character, it's showing there's not enough volume wanting to change the structure of the whole uptrend that we are in or downtrend that we are in. So those are just a few things to keep in your mind. Make sure that the change of character produces a very big fair value gap, showing that the price wants to reverse. But thank you for staying till the end of the video. This is the exact strategy. I turned $500 to over $30,000 in just 3 weeks of using this strategy. I did a fun small account with the team and it went absolutely crazy. So that just shows you guys the potential of this strategy. Now, I'm not going to be like all these other gurus saying this is the one shoe fits all, but if you like what you see and it makes sense to you, this is something that you might want to learn and try out for yourself. But don't get too frustrated. If you guys need any help, make sure to find me on any social media and DM me. But I also trade every single day live within our Discord. So you guys are more than welcome to join that every single day and watch me use this strategy every single day and help answer all of your questions so you guys can understand this strategy for yourself. But thank you guys. Make sure to like and subscribe if this is something that helped you out or you can see yourself using in the future. But thank you guys so much. I will catch you guys in the next video.